going into this, there was a lot of folks thinking that basically we may see a hike in the July meeting that soon. After this, that seems to be being pushed off pretty significantly. So afternoon, we have a shorter week ahead of the holiday coming up here tomorrow, but we get all the jobs data in this short week, which is a bit of a rarity. So we're going to cover a lot on the jobs front. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered after each of these market updates every week. And again, this week, we're going to cover a lot on the jobs side of things, but we will also touch on how that translates to some of the potential moves that we may see from the Fed as a result. So this was jobs week, and in a kind of rare occurrence, given the holiday tomorrow, we actually got basically all the jobs data all by today on Thursday, whereas typically some of the data falls into Friday. Let's start with let's just go in order here. So on Tuesday, we have job openings data come out. This is the JOLTS number. This shows 7.59 million job openings. This is about where we were last reading as well. So not too much to think through here, but certainly, an important data point, especially as we talk about what the Fed may be watching. Yesterday on Wednesday, we had the ADP employment report come out. This showed that we added 98,000 jobs. This was just under expectations, but was another strong number for sure. But again, that one did miss expectations slightly. And then fast forward to today on Thursday, we had both the employment report, so the non-farm payrolls, and we had the unemployment rate both come out. The employment report shows that we added 57,000 jobs, which was roughly half of what the market expected. So definitely a big under a miss, I guess, as far as expectations on the employment report data that we received today. We also had the unemployment rate come out, which, however, might suggest a little bit of a different story. It ticked down slightly to 4.2%. So all that is to say, I think that basically, I was talking to our portfolio manager as well, and we kind of, this term is thrown out there a lot, of this idea of a Goldilocks data or jobs report. And I think that's kind of what the market is seeing here today, because what we're seeing as far as how the markets are suggesting this might translate to Fed decisions from here is that the market is kind of suggesting the Fed hikes may be a bit further out, with basically suggesting that rather going into this, there was a lot of folks thinking that basically we may see a hike in the July meeting that soon. After this, that seems to be being pushed off pretty significantly, certainly looking towards the end of the year, but fewer folks are on the side of suggesting that we may have hikes here in just that next July meeting alone. So significant impacts to how the market anyways is pricing what the Fed may do ahead. That does not mean that's what the Fed may do ahead, just to be clear, but that is kind of what we're seeing in terms of how the market may be suggesting where we go with the Fed path as the year unfolds. So very interesting data points on the jobs front, a bit of a mixed bag, and depending on how you look at it or where you look, certainly could tell one story or the other, which is very interesting. And I think just enough to, I guess, give the markets a little pause for what they think may come from the Fed's path ahead. That said, I believe we get the Fed meeting minutes on Wednesday. And so as time goes on, we will have a little bit more of a story on what Fed Chair Warsh and the new, the new regime, so to speak, it might be looking at ahead. Just as a heads up, markets are closed tomorrow for the holiday. Next week, again, we do have the Fed meeting minutes. So we will break that down. Very good timing after the jobs reports that we got here this week. In the meantime, have a great 4th of July weekend, and we'll see you next Thursday at 3.